Good evening, all. Ira Epstein, and here we are getting on to 5:55 p.m. on this Wednesday, the 30th of August, 2023. And yep, I'm here for the Labor Day, so you'll be right with me. We'll talk about the Labor Day sale in a few minutes because it's ending shortly, and a lot of you have taken advantage of it. Congratulations, because you're probably not going to get from me a discount like this again. We had a lot of people buy, and it told me that I went too far in the discount. All right, let's talk about where we're at. I want you to remember the word inflection point because that's what we've done. The JOLTS data set everything off that once we got under 9 million jobs being offered and we're not seeing the turnover of jobs, people that have them aren't jumping ship like they used to, problems. What does it mean? Slow down. But how much of this is seasonal? Remember what I'm about to say. I live in Chicago. It's gorgeous right now, but we're going into September. The restaurants aren't going to hire more people to work outside. The park district's going to start letting people go or have let them go. The beaches aren't going to have lifeguards anymore. Everything in service that's outside, and that's the key that I'm leading to you, slows down a bit. Important. Construction changes a little bit. You know, these high prices, projects that were underway. Well, with these prices, how many more projects are underway? I'm not seeing new high rises go up around me. And I live in the hottest district in the city where it's building upon building from the Googles. Everything's where I live. I can walk to these things. And I'm not a long walker, but that gives you an idea as to what's going on. So we're going to get to Friday's jobs number, which I think is going to be very important. The estimate's around 170,000 new jobs. The unemployment rate, they're looking still for 3.5%. Maybe it goes to 3.6, but 3.5. They're looking for wage growth, maybe up 0.3%. It was up the month before, 0.4. The pressure's coming off, is my point. We're not getting that. You can't go in and say, hey, give me a big raise or I'm scooting on you. That opportunity was 6 months ago. This opportunity today, a lot less. You can still scoot, but you're going to be working harder, and wherever you go, they're not going to offer you probably what they did a while back. So we got to an inflection point. That's my whole thing. And with that, as soon as the dollar broke and there was ideas, the Fed's on pause, that means a rate cut's down the road. Gold takes off. The silver's back not to $23, but $25 an ounce. The copper market's all about China, and you got problems up here in platinum because you're up into major resistance. But that's what I think you've done. Let's take a look for a minute at where you're at. How long have you heard me say that I think the next rally can get up to and fight a battle at the 18-week average of closes? It's probably a month, if not longer. I remember when we were talking right here on a weekly chart, and I thought it would kiss that and turn down. Now the question is, does it punch through it? I'm not saying it has to turn here. I'm saying it's likely, but I need to see two pieces of data to have my hands on this. Number one, what tomorrow we're going to get the income and expenditures. The Fed always looks at those numbers, the PCE part, so keep your eye on them. Friday, the jobs report, and then we're going to get a series of CPI and PPI. Those numbers are going to weigh heavily on this market. Is this the resistance point on the chart in gold? It absolutely is. Now, if you can get up and over these points here and close there, and I'll give you an idea of what those are if the market will let me move. And it is. I did this right, finally. You know, even a broken clock's right twice a day. As you come up here, 66.60 was the last high close before the market did this, turned down, and is now reversed back up to come into the resistance point. So that's the number that I'll be watching in a close manner. This is a nice rally, and as I told you, this is called a vertical price break. The market snapped back up, and it's not uncommon to get a third to 50% correction in that, and that's pretty much what the market's doing. You have the higher lows, higher highs. You know, the interesting part is literally right now as we're talking, I'm doing for my new charting course the whole PowerPoints right now. We've redone them on explaining how they work and everything, and I'll be done with that tomorrow. Then I'll start recording that whole chapter for the new course. Then I move from that to the other. So I'm hard at work in doing what I told you. But as you can see, the trend is up. The resistance, the first resistance we talked about, could have been one of two numbers. The first, the 200 week, because it's above the market, or the Bollinger Band, and they happen to be right together, and today you went up there, boom. So you've run into what I call the brick wall. Should the market be able to bust through it with a big bulldozer and get something phenomenal to go, maybe the market can make a run to the 200. I am not expecting it because you're overbought as can be. So it's going to take some piece of news that is blowout, in my opinion, to get the market to run up there. It's more likely this is a pause. It could pull back and want to fight a battle at the 18-week average, but there's no sign here to go short. There is a sign, and this is the difference, to not be long. Now, before I go on to the next chart, I want to remind you what's going on here. We have our 40% Labor Day sale right now. It's only a few more days, and that's it. You're not going to get from me 40% off again this year. So just count on what I just said. It isn't happening. If you go to our website, iraepstein.com, or anytime during here, you can click at the top. It'll take you to the area that you go to learn about all that's going on. Let me show you what you'll be doing. You'll come into our website, and this is what the page looks like today. And right up here, you're going to go either into the research or the education area. And when you go there, you can look to see what the courses are, what kind of research that we're offering, and away you go. You know, I want you to see the videos that I have, because every day I'm really sticking my neck out a country mile saying, buy here, sell there, do this, here's your stop, here's why I want you out, here's longer term trades. And yes, one of the things I cover, unlike what you see me doing on the daily, is I keep you up with weekly charts all the time. And I review what I come out with on the weekend in trades and keep up with it during the week, how they're doing. Some of these trades can last a month at a time, longer than that. They're longer term in nature, and then we go to the daily charts and try to put it all together. Again, if you're interested, go right on up there, period. Okay? So now let's go and finish up with what we had. Here we go. So the next chart we've got is the gold-silver ratio. It's still showing signs that the silver, as this falls, is still stronger than the gold. But I'm telling you, I'm having great problems in wanting to be long silver unless it embeds. And then on pullbacks, I get very interested. Where are we? Now, again, the enhanced Bollinger Band course is not $120 now. It's 40% off that. Yeah. So you've got, what, a $48 discount if you want it. But are you embedded? The answer is, well, you can't count Thursday. We don't know where that's going to finish up. So you got to go back on the chart. Let's come back here a day. Wednesday, both numbers were over 80. Tuesday, they were both over 80, but ain't so the day before. So you're not embedded yet. I'll leave it at that. Then we get to the copper. And I had calls from people in the business. What do you do in copper? I said, this is an area where you got to liquidate longs, in my opinion. We're seeing that in China, they still have not accomplished anything. Countrywide, I think that's the name, the largest property developer, issued stock today to one of its biggest lenders. Why? They can't pay him cash. So they're giving away parts of their company. They may have to try to float more debt if anybody will buy it. The real thing that will rescue the company is people have to buy. So what China has done, and I think you know it, they have lowered their current mortgage rate, and they lowered that people that had mortgages could apply again for another one to buy another property as though they never bought the first home that they had, because there's a penalty if you did that. Well, they have to do even more. This isn't enough. This is Band-Aid work. They got to pull out the bazookas if they want to save these property developers. It's all going to be up to the state. So when you're there, if you don't have the state doing it, I'd be very, very cautious. Am I bullish copper long term? Yes. Once we're through with high interest rates, and we will get through with high interest rates worldwide at some problem. Keep in the back of mind why this happened. COVID. Everybody tried to save their economy. Well, you're getting through all that, and now we have to fight the inflation that we all created to get that going. And when they do, the world gets back to normal. By the way, I went today and I was looking at the dates on my COVID tests. We threw out, I think, all but one of them. You got to pay attention to the dates. And I know a lot of you that watch here, you don't believe in the COVID shots. I do. I don't think you're wrong. Please don't think I'm wrong. It's my right to do what I want to do. In the platinum, I think you're up at a big resistance area. What's going to make this market run through the 100-day average and the 200-day average in the Bollinger Band? Well, the only thing that can do it is if you embed, which you're trying to do. So if we take a look, day one of embedding was today, day two was yesterday, and day three is not there. Tomorrow's an important day for metals. They can embed or they can fail. If they fail, problems arise. So I think tomorrow you got to be all tuned into the market. And in the dollar, you lost the embedded reading. I love this. And right down to the 18-day average. It doesn't have to go much lower. You've got your correction. The market can now go in sideways action for a little bit here to see all these reports that come out and what to do with them. So again, if you're interested in my research, and I certainly hope you are, so many of you write me, hey, do Merck, do this. I do a lot of these in our paid research. This is free to you guys. I do listen when you make a request. I change them, and I will change them, but I'm not going to do what you want on all of them. Join me, and here's what I also do. I did it today. People write me, and they go, Ira, would you cover for me a Splunk? Will you do this? Will you do that? I do a chart right then and there, a video. 30 seconds to a minute. I'll bring it into the daily, the weeklies. I send it right out to you. Who else is doing that? I'm Ira. You have a good day, and remember to click up here and subscribe. I'll see you tomorrow.